Derek here, rural investor. Disclaimer, for entertainment purposes only, not financial advice. Please do your own due diligence and consult any financial professional as you see fit. Very grateful to have a number of people reach out and want to have me help them get started. It started to get a little bit overwhelming, but if I have reached back, please continue to reach out individually. But in case there are others, and I know there are some others that I haven't been able to get back to yet, I wanted to give you a blueprint to start from, to be able to Google and look things up and check competitors, but also not have to worry about all of the different, symbols and abbreviations and things that I rattle off in these videos. There was a comment that was like, "Oh, this is great, but you say all of these things, right?" And so we're going to address that, today. And so in the description, I've created a blog post that has a table in it. And within that table, I have a list of 14 ETFs that I would call pretty well diversified. That gives you a start. Not only does it have the yields, it also gives you a short little description of what it is, which might help you, again, do your own due diligence to find competitors, or at least to validate, my personal opinions on these things. And so when you put this basket of things together, it created a portfolio that yields about 16.5%. That also has exposure to things that react differently. Because our goal is income, and income when we're not having to manage the portfolio, we want things that sort of smooth out the ride, in my opinion. If the Fed, who's meeting this week, and I hope you don't have to watch those notes, I'm going to watch it, but I like this stuff. The Fed, who's meeting this week, if they decide to randomly increase interest rates, the market's going to go crazy. I have things that like interest rates going up. I have things that like the interest rates going down. I have things that don't really care where the interest rate is in there. We have things that will react well to the meeting last week in Davos for the World Economic Meeting. We have things that don't care about that meeting. And so if you go ahead and click that thing in the description, it should take you to a blog post. There should be a table. The blog post has some simple math to give you some ballpark numbers. If you run the portfolio, you'll make, I think it's about $300 a month. In 5 years, you'll make almost $600 a month, or about $7,000 a year. Best estimates, right? Flat price, consistent income, and reinvesting that along the way. So the goal is to help give you something that's a little bit more easy to understand, a little bit easier for you to go and do your own research on, and a place to start, so you also can make money while we got, somewhere around 2 feet of snow out there today. I've gone through a whole, I think 6 gallons of diesel plus whatever I filled up in there today. Meanwhile, I got paid today my normal amount of money without having to worry about anything that happened in the news. So I really appreciate everybody who's sort of come along. I haven't put together a starting point like this before, and so I wanted to give people, now that it's sort of becoming a bit too much for me to personalize for everybody, a place to start. And so what you'll find in that file, most of your money I would allocate to something like the S&P 500 or the NASDAQ 100. In my example, I think I put 55% of the money into something like SPYI, QQQI, and Maggie. You can check it out so you can see the others that I listed there. Also in there, I think this is important to note, you would get exposure to real estate, rental property. You get exposure to business development companies. Those are money lenders, usually to small businesses that banks don't necessarily want to work with. There are some great business development companies that are never talked about in the news. The best ones have beaten the S&P 500 as far as returns, and they pay high dividends, which is fantastic because the fund that I put in there then pays a 10% distribution on its own, and it takes all of the best ones and puts them in a basket. I really like the fund. There's also a fund in there that does preferred stocks, which generally have a high yield on common companies. The thing about a preferred stock is if a dividend has to get paused, you are owed that dividend before they can start paying out common stock dividends. That fund yields about 9.5%, but it provides a little bit more safety than a generic stock would or some of these individual things. It's not quite a bond, but it's more safe than a stock. And so there's some of that in there. And then we have things that are exposed to growth, right? I've got a cryptocurrency in there. I've got semiconductors, which are fueling the AI boom, and a couple of other things. But I would encourage you to take a look if you're really interested in getting started. Look at the names. I did a pretty generic, even distribution of that rest of that 45% across the other names. Because again, our goal isn't to sit and watch the market every day and worry about the news. Our goal is to be better off today, in 5 years than we are today, right? And to do that, we want passive income. We want that passive income to work for us. And to do that, you actually have to start. The phrase is time in the market beats timing the market. And so if you go with this broad market approach, you don't have to worry about something being overvalued and undervalued, because what you're doing is you're taking the average and you're getting that 16.5% yield. But more importantly, you're in the market and you've started that clock for 5 years, 6 years, 7 years from now, when your life should be better off. And you can look back and say, I'm really glad I started this for me. Thank you, past self. So anyways, thanks for tuning in. Hopefully you find the starter link useful. Again, it's in the description below. It's a blog post with some simple math, so you can always fact check me or do your own due diligence as a place to start from. But have a good day, and thank you.